Hello, everyone, and welcome to the new edition of CEO and Market Expert Interviews. I'm your host, Lucian. Most of you know me from X or former Twitter as Triangle Investor. I'm very pleased to host once again CEO of Denison Mines, Mr. David Cates. Dave, great to see you again. Thank you for coming on.
Yeah, Lucian, happy to be here. Hello from Saskatoon, Saskatchewan.
Hey, great. Dave, let's start with the fresh news from the uranium market, and that will go from, after that, we will go to company developments and specifics. First of all, Kazakhstan, government resigned. Then a few days before, we had Q4 results from Kazatomprom that warned that 2025 production plans could be harmed by construction delays and continued difficulties in obtaining sulfuric acid. Dave, my question is, in your opinion, how will this series of events affect the market, both short-term and mid-term?
Well, let's use one word to describe sort of all of these things, and it's uncertainty.
Yeah.
And uncertainty is a negative thing when it comes to the buyers in our sector. They operate in a world of predictability, reliable, always on power. So when you mix that concept of having nuclear power plants running all the time that can be counted on predictably, and you introduce unpredictability to the supply of their feedstock, that becomes concerning for the market. And so I think you've seen through a number of these different developments, primarily on the supply uncertainty side, the production side, that the market has responded quite quickly because someone out there is more sensitive to the uncertainty than someone else. And they have to respond to that. And often it's maybe a trader exploiting that situation to ultimately solve someone else's potential problem. But all of those things are, I would say it's building to a place where our major suppliers in our sector have historically been very reliable. Okay, Cameco, for example, has a history of excellent reliability, but even they've introduced, significant uncertainty to the supply side of things with recent production disruptions through COVID, but then also more recently through the second, third quarter, guidance adjustments for 2023. And now you see that from the world's largest, producing country out of Kazakhstan, similar sort of uncertainty. And if it was small producers, it wouldn't really matter too much. It would be on the margin. But when you've got number one and number two showing that they can miss production or trim forecasts by millions of pounds, well, that's something that makes buyers uneasy. And so rightly, you're seeing the market pay great attention to that. And we saw the spot price, for example, gap up significantly on, the Kazakh production guidance, production miss and their guidance on that. So it's logical. I think what's concerning more on the larger, bigger picture here is that it's really, we have not seen number one and number two come back from their pandemic disruptions and shutdowns. And it does remind people that uranium mining can be incredibly difficult.
Yeah.
And when we think about all of these projects that, the sort of bear case says are going to flood the market, well, good luck having them all flood the market when existing mines that have already been built, have credible operators, are struggling to return back to previous predictable levels of production. I mean, just to pull on the thread a little bit more as a developer ourselves, it's incredibly difficult to do what we're doing. And so I understand the challenges that they're having at Cameco Kazatomprom, but you can read through this news quite a lot if you want to in the overall challenge that the supply side has in front of it now and will have in front of it potentially for a decade.
Yeah, definitely. And Dave, what about sulfuric acid? We know that you are a few years away from first production, but you have ISR project in development, and I'm sure that you are watching the situation with sulfuric acid closely. Is the sulfuric acid availability becoming a global problem, or this is just a local problem for Kazatomprom?
Yeah, I would say we see this as a local problem. Supply chains are global, broadly, but and we're seeing, of course, an unwinding of that coming out of the pandemic, and also with the geopolitics around Russia. So it is becoming a more local supply chain. Our business is really focused on a local procurement strategy. It's lower risk, and in Saskatchewan, we have the benefit of being neighbors with Alberta. And Alberta has a significant source of sulfur as an output from oil and gas production. And so our proximity to access to sulfur, which is then used to create sulfuric acid, is not seen as a significant risk here. It's a different dynamic. We are not competing for supply with Kazakhstan or that part of the world. We're accessing it basically more locally, and able to use the existing local infrastructure to access sulfur. And that's what we did when we operated our feasibility field test in 2022, is we were able to procure sulfuric acid from a vendor that basically has a footprint in Saskatchewan, Alberta.
Excellent. Excellent, Dave. Okay, let's discuss your projects. So we can start with the most recent news, and that is the restart of McClean Lake mining operations, which is run by Uranium and Denison. Mining is planned to commence in 2025, according to the press release. Dave, what does this mean for Denison? And if you can talk specifically about the SABRE method you will be using there.
Yeah, so I think this was maybe unexpected from the market, and I'm not surprised by that a little bit. I mean, we talk about McClean Lake because of its critical infrastructure there, the mill
Yeah.
that is processing all of the ore from Cigar Lake. And many people are sort of new to the uranium space. They haven't been following it for as many years as you have, or of course, as many years as I've been in it.
Yeah.
But McClean Lake, of course, is a former producing mining site. Using open pit mining historically, small high-grade pods close to surface that were accessed by open pit and then processed at the McClean mill before it started processing Cigar Lake ore under the tolling agreement. But we have pods that we did not extract and did not mine before the mining operations were shut down. And that was, like over 15 years ago. In that interim period, we were working together with Orano on the development of the SABRE mining method. And so SABRE stands for Surface Access Resource Extraction, so SABRE. And, this mining method, I have to give Orano great credit for this because they have quite a long-term vision. And so long-term vision supports things like innovation and R&D. Whereas, a number of other companies, and I can say ourselves, we've been motivated on that innovation front with Phoenix and ISR to basically transform our business. But there were times over the last 15 years where it was difficult to justify investment into R&D. But Orano does look at a very long-term view. And so we've designed a mining tool that's patented and owned by the McClean Lake joint venture, which means that Denison owns 22.5% of this mining tool technology that allows us to mine from surface. And so it uses the similar technology to the jet boring system that is used at Cigar Lake. And the fundamental piece here is a high pressured water jet nozzle. And so you're mining in a call it a soft type rock, so a sandstone that has a high grade uranium within it. And you're using this jet nozzle almost like, on steroids when you use a pressure washer and you turn it to the tightest setting to get the strongest stream.
Yeah.
You're using that in the ground to go in basically a circle, and it is cutting the rock in making a cavity. So it starts by cutting very close and then eventually starts breaking up rock in a cavity, cylindrical like cavity, reaching out with a diameter of several meters. And the idea here is that you then are able to get cuttings similar to what they do at Cigar Lake. They do the similar approach, but they drain those cuttings into a drift and mechanical environment below the ore body at Cigar Lake, and then they pump those cuttings up to surface as a slurry. We don't have the stuff below. We're not going underground. We don't have any of that infrastructure cost. we're doing this from above. And so we end up pushing the cuttings back up to surface through a specialized drill string. And essentially, we're able to excavate a cylindrical-like cavity, say 200 meters down from a setup on surface. We backfill the cavity after we've mined it, and then we move the setup and mine a cavity adjacent to that previous cavity. So it's very nimble. You can sense that, it can be very selective. This is not a bulk mining type operation. It's very selective. You need to know exactly what cavity you want to mine, set it up and mine it. But because of the nature of it, almost like a modular basis here, you can be very selective and nimble. You can stop mining very quickly. You can start mining quite quickly. So maybe just to elaborate a little bit, in 2024, we will start like a pre-mining program. But there's no major capex for this mining method because we already own the equipment. We already bought the equipment and have all the pumping and specialized drill equipment from a test that we operated, in the 2020 time period, finished in 2020, where we mined at McClean North, the deposit that we're now going to start commercially mining, where we mined several cavities using this mining method on a commercial scale basis as part of a test. So this has been proven. We've done it. We know the numbers to put into our models based on productivity rates. We've successfully recovered the ore, and we have the equipment. So all we're really doing in 2024 is drilling, basically getting the equipment back up and running. But then we're carrying out a campaign of drilling pilot holes. And so we'll drill somewhere in the range of 8 pilot holes, which will basically allow for us to come back in 2025, put our specialized drill equipment down the pilot hole and mine out 8 cavities. And then in subsequent years, the intention is in 2025, when we're mining these 8 cavities, we're going to go drill more pilot holes so that in 2026, we can move those setup and excavate the cavities for the next area and carry on in a continuous commercial basis for about 5 or 6 years, with total production expected in the range of 3.8 million pounds.
Okay, I have one technical question. Does the SABRE mining process have the same ore hole access requirements as ISR, seized and cemented wells, groundwater isolation? Can you expand on that, please?
Yeah, so it's not the same, but it's fundamentally similar. I mean, you're drilling a larger diameter hole, and you are casing it so that you can basically get your drill string down and isolate where you are mining. So there are a lot of similarities. Our ISR wells, for example, at Phoenix have a little bit more and a little bit different stuff going on because we need to use the well to be able to actually inject our solution, put it through the ore body, and then recover the solution. Here, a lot of the magic is happening within a drill string. So it's a specialized drilling pipe that is attached to a very large drill rig, and it's within the drilling pipe that a lot of this is happening, rather than in the ISR setting where it's happening really within the well. In the SABRE case, your hole is really a means to access, a means for your drill string to access the ore horizon, but a lot of similarities in terms of accessing your ore from surface.
Yeah. Do you see that method of extraction becoming the go-to method for faster resource development?
Well, I mean, we can be very quick at McClean North because we're already permitted to do this with our permits from the province and the federal government. And it certainly can be more nimble than conventional mining methods because, the time to access the ore, once you have your surface infrastructure set up, the time to access the ore is a drill hole for a pilot and then dropping in your equipment. So that's obviously much faster than sinking a shaft or excavating a decline or opening up a pit. I think it's not a perfect mining method, and none of them are. Like it is always about finding the right fit for the mining method and the ore body. We would say, of course, at Denison, that the ISR mining is really our preferred mining method for the region, because we believe we can achieve very low costs and successfully exploit large scale deposits. This mining method is very good for things that are a little more shallow. So the depth is maybe more of a constraint right now for SABRE. Because we have to get high pressured pumping power down. So the further we go, the more power we would need. Right now, we're comfortable at 200 meters. And it's also good for things that are very concentrated, because every time you set up the drill, you have an incremental fixed incremental cost. And so the more you can access from each drill location, the better. And that suits things that are maybe more tall or vertically situated, because you can imagine, if your cavity's this deep, versus this, it's one drill setup, but you're going to get a lot more ore out of this. So SABRE is really well suited to something like that. ISR, perhaps more amenable to something that goes laterally. But of course, we benefit from good thickness in ISR too. But what I love about it is you've got a company like Denison that is well funded, advancing a flagship development asset in Phoenix, has this extra production coming from McClean. But more than that, we've got leadership on two really important mining methods in our region. There's nobody that knows ISR better than we do in the Athabasca, and there's only two people that own part of SABRE in the Athabasca, and that's Denison and Orano. So we do have maybe more tools in our mining toolkit than really anyone else operating in the region.
Definitely, Dave. Okay, let's move to Wheeler River. Can you give us an update on Wheeler? Is there any changes here in the plan is like before, de-risking mid-2025 development decision, production 2027. Is that still the case?
Yeah, you've got the dates right. I think the work is a little different. De-risking is done.
Yeah, I meant that.
Yeah, exactly. When we finished the field test and the feasibility study, we would say that was as far as one could de-risk. Now we're into detailed design engineering, which is really the beginnings of being set up to make a project decision and the beginnings of actually executing on the project. So we've completed or are just about completing front-end engineering design, which allows for sort of final selections of key components, identification of key long lead items, and now we're transitioning into detailed design. And detailed design is really about delivering you plans that you can build from. That's if I make it as simple as possible. I mean, you can't build a mine from the feasibility study. It's got a certain percentage of detailed engineering that's been completed. Now we need to complete it to the point where we can give a construction contractor plans, and we can give a procurement department plans and say, these are the things we need to actually build it. Now, the feed work has been really critical because it has helped us identify a number of long lead items. And while mid-2025 is still the date we're working towards for permitting and a final investment decision, you're not really able to start construction the next day unless you're ready to do that.
Yeah.
And that's where the long lead procurement has come in, is identifying items that need to be on the critical path of engineering and material procurement. And that's where our financing in October was so important, was to be able to put our balance sheet in a rock solid position, add our physical uranium to it, of course, and it's incredibly strong, but put us in a position where we can carry on with procurement over the next 12, 18 months to make sure that by mid-2025, we have the things we need when we need them to execute on then a 2-year construction plan to see production towards the end of 2027 or into the beginning of 2028. And I do think that's also slightly misunderstood when people think about other projects or, the supply response to an improving market. I mean, some of these projects that they've basically been on technical studies from a decade ago. Nobody's invested in them. Now, all of a sudden, they're going to ramp them up and hire a bunch of consultants, which is fine. I mean, that's a strategy. But then from there, take it to a feasibility study, make a well-reasoned investment decision, then start doing feed and detailed design engineering. These things take time. They take money. We just signed a $16 million contract with Wood to take the detailed design for most of the project forward. And then you also have to be buying and procuring things and have a team ready to execute it. You know, like that does not happen overnight for some of these projects that are in the market that have been out of the money for 15 years and today are starting to sniff economics. So, you know, yeah, we've been on a journey since 2018 to execute on Phoenix. And here we are in 2024, and we're, you know, call it a year and a half away from being able to make FID. You know, I think that should be sobering for a lot of people. We've had great conviction because our project has excellent economics, no matter what the
Yeah.
uranium price is. But I mean, geez, our team has been committed for quite a long time. And, you know, in Saskatoon, hard to tell from, you know, my backdrop, but, you know, we've got a team of 40, 50 people working in this office with a singular focus on,
Yeah,
on
yeah,
delivering Wheeler River.
definitely. Dave, you mentioned economics. Will they stay the same?
Yeah, look, the economics are they're as current as you get in our business. We finished the feasibility study in middle of 2023, so we've reflected the large majority of that big inflation push that came around the
Yeah.
pandemic. So we have great confidence around our numbers being reflective of the project that we'll deliver. And when you look at sort of the peer group, I mean, most people are working from studies that are much older. So nothing to this point that suggests that we're not going to see economics that are aligned with the feasibility study.
Okay, okay. You are, of course, 100% unhedged, but are you approached with proposals to start contracting some of your future production? I mean, has the company considered anything similar in that direction?
Well, so we have no sales commitments from production. That's correct. So you're right that we're 100% unhedged, and it's certainly the most complicated part of our business when you get beyond the technical risks around mining. Deciding how to sell your uranium is complicated, and it's different than other commodities. I mean, the bulk of other commodities are operating in highly liquid spot markets. There might be some off-taking for certain bulk materials, but for the most part, commodity markets that investors are familiar with, they have highly liquid spot markets, and spot market reflects, you know, a degree of meeting of the minds of buyers and sellers en masse, and they expect commodity companies to sell at that prevailing market price, and they buy stocks and commodity mining companies for exposure to those things. You know, in uranium, you historically you have had a thought process from some of our major leaders around the importance of signing fixed pricing or long-term contracts with fixed price elements. It's important to remind people, and I'm sure a number of your followers will know this already, but important to remind people that long-term contract is a broad term. So it just means deliveries over an extended period of time versus a spot sale, which is, well, I'll give it to you within the next month or so, right? It doesn't inherently mean, or doesn't in itself mean that the pricing is fixed.
Yeah.
So there are fixed price contracts that often have an inflation escalators to them. There are contracts that have elements of fixed price and elements of market price. And then there are market-related long-term contracts that have perhaps floors and ceilings. Now, a floor and a ceiling does end up in certain environments looking a little bit like a fixed price, because if you're at your ceiling, you're now operating on a fixed price basis. You know, having to decide how to market your product is hard when you have an industry leading cost. If we had higher cost, it would be actually an easier thing to conquer, because you'd understand that there are certain market environments where you don't make money.
Yeah.
And so then something like a floor becomes incredibly important to the long-term viability of your company. And the trade commercially to getting a floor from your buyer is to give a ceiling. And every investor would understand that that will make sense for certain projects and even fixed pricing. If you're borrowing a big amount from a bank, the bank just wants to know it's going to get paid back, and it doesn't want to worry about your commodity. So they want fixed price contracts for a certain volume of your sales so that they know you're going to get it back. That's all. That also would be easy we have a cost that arguably doesn't need a floor based on like the history of the uranium market. We
Yeah.
could make economic returns in the worst of years. And we at the same time don't have a huge debt need. You know, we have an incredibly strong balance sheet that is already almost ready to fund our entire CapEx for the project. And so we're not being motivated by a whole credit group of firms with all their different risk people trying to tell us how much they want us to contract. So we are being approached by utilities. They are interested very much in getting alternative sources of Canadian uranium. We are developing our plans now that we have the feasibility study complete from 2023 to be able to identify the best way to market product. We have all options available to us because of our cost profile, and we are working on this. The other thing we're working on is our physical uranium. So this is an incredibly strategic asset, has increased very significantly in value, and now puts us in a place where, as I mentioned, we may not need a significant amount of external capital, whether it be equity or credit. We may not need very much at all to be able to fund initial CapEx because our physical uranium is so valuable, plus our cash on hand is so significant. But, you know, we can't build the mine with uranium. So one of our commercial fronts right now that we're working is how do we convert the uranium into funds? And what is the best way to do it? Is it simply by selling it in a reasonable way? Is it by finding contracts with utilities on a more long-term basis that include some near-term deliveries where they purchase it responsibly from us? Is it borrowing against it? All of these are currently under evaluation, and they really will be a critical part of building an overall commercial strategy for the company. But we're not afraid to have market exposure when we talk about future production. We're also not afraid to have a level of fixed pricing where we think it's attractive to us. And maybe the last point I'll make, Lucian, is that I kind of like to believe that we've already won the contracting battle. You know, our friends at Cameco went through a very difficult time when they shut down McArthur River.
Yeah.
And we're all very grateful for their vision to make that curtailment, understanding that the market did not need those pounds. We also know the Sprott Physical Uranium Trust is very influential in getting our market back on track. But, you know, Cameco is in a situation where they were contracting and have built quite a nice book for their mines over the next 5 years to bring them back on. But, you know, they've got a contract book that certainly has some restrictions on it, and they might be more market related, but they have a significant number of, they must have a significant number of ceilings that are below current prices. Because when you look at their own guidance on their future realized uranium price, and they have a great table in their management discussion and analysis in their financial filings that outlines the calendar year and on one axis and the uranium price, the market uranium price on another axis. And then in the table identifies what they project to be their realized selling price based on their commitments. And, you know, I won't ruin the story because I want people to go look it up. But basically, you go out to, say, 2027, and you go to $140 US uranium, and the price they're realizing is in the 70s. And so when I say we've already won, it's because whatever we do now is in $100 market. And, you know, I mean, subject to us maintaining a $100 market and us actually entering into any level of commitments, if we do it, we're entering into a market in that environment. So if we sign something that's market related with a floor and a ceiling, we're in that space. And so waiting for Cameco to shore up its production or its sales book to support restart. I mean, people can go look at my interviews over the years. We expected that would happen, and we expected there would be resistance at that price point where they were doing that $40, $50. But waiting for them to do that and now competing with the much higher cost, much more risky development assets, which are often in Africa, competing with them now is allowing the price to move up and allowing our company to capitalize on a higher price no matter what we do.
Yeah, just to clarify on the physical uranium, you had 2.5 million of physical uranium in your portfolio. You sold a portion of it. So how much of it is sold, and what conditions, if you can say, and what is the plan for the remaining? You basically you said what is the plan for the remaining material, but please clarify on the amount sold.
Right. So we purchased 2.5 million pounds in 2021 at $29.66 US per pound. In the sort of fourth quarter of 2023, we sold our first pounds from that holding. We sold 200,000 pounds, and we realized a price between $70 and $75 per pound. So an excellent return on those first 200,000 pounds. So we started 2024 with 2.3 million pounds in physical uranium. In 2024, we are expecting to sell approximately 300,000 pounds to head into 2025 with an incredibly strong cash position to support the start of project development activities and construction at Phoenix, say middle of 2025. And the importance there is that, as we just touched on, we are looking at how do we responsibly monetize the balance of the uranium / how do we fund the balance of CapEx for Phoenix. Now, we don't necessarily want to be in a position where we're approaching middle of 2025 and a FID and commencement of construction with a weak balance sheet or a weak cash position. So that's what the 300,000 pounds is about, is just taking advantage of the market at some opportunistic windows during the year to cash up so that in 25 we are ready to go, and then giving us a little bit more runway to hold on to our physical a little longer, find the right way to monetize it or to leverage it to fund the rest of construction.
Okay, fair enough. I want to return to the projects. So we didn't discuss Waterbury Lake. This project also demonstrates potential for ISR, and we have been closely watching how you de-risked Phoenix over the years and delivered milestones for ISR on Phoenix. Is the de-risking path here similar to Phoenix, and what is your development plan for this one?
Yeah, so the de-risking path is fundamentally the same for what we call it the THT or Teheldehtwe deposit at Waterbury Lake. Fundamentally the same. And I would say that from our experience, there's really no way to fast track the de-risking. I mean, we know exactly what we want to do, how we will do it, and whatnot. So, I mean, we're really on the fastest path there is, but there's no way to sort of short circuit or fast track de-risking. You have to do the work. The ore bodies are all different. They all behave differently. Yes, we're in a primarily sandstone hosted uranium deposit environment at THT, which is similar to the deposit at Phoenix, but it is different. I mean, it's not situated, the ore is not situated in the sandstone the same way. There is a little bit more basement hosted mineralization that's accessible through the sandstone. So you do really have to understand the deposit. And so in 2023, I think it was also underappreciated, the work we did there, and that's fine. We focused on Phoenix and delivering the feasibility study and proving up the de-risking process and ending that, transitioning to feed. But we carried out a tracer test at THT, which was a really notable accomplishment when we did it at Phoenix, because it demonstrated that information we collected from preliminary hydrogeologic testing using pump and injection tests and a series of test wells. It illustrated that the data we collected from that was valid, and it provides great confidence around the ability to move solution within that ore zone. And so we have successfully completed a tracer test there, and folks should certainly turn to our news releases from late last year on THT to get more information on that. But now there's going to be a focus on the next stages, and an important scope is metallurgy. We've done extensive metallurgical testing for Phoenix, specialized core leach testing, as well as column testing, because there's always two ingredients. There's really three core ingredients, but everyone focuses on the first two. But there's these key ingredients to all ISR, which is you need to be able to move the solution through the
Yeah.
rock. That's permeability, that's these pump and injection tests, that's tracer tests. And then you need to be able to get the uranium out of the rock or liberate it from the rock or dissolve it from the rock. So that's leaching. So that's all the metallurgical tests that we do, recovering cores, using specialized lab apparatus to leach actually while the core is intact, build what we call like a recovery curve, showing how quickly you'll ramp up production and what it will decline like. And then you need containment when you're operating in your mining environment. So we use a freeze wall as well as pump and injection control for that. So again, that's more hydrogeologic testing, understanding that you can control the flows in the ore body. You need to do all these things, but the data is different for every deposit. But THT is on track for us to advance. We've not set a target date, but with the tracer test completed and metallurgical tests planned for 2024, that would set us up to be able to advance from a PEA to a PFS. And Lucian, we will have very clear guidance on our plans for the year as part of our year-end MD&A, which is coming out at the end of February, beginning of March. And we guide on all of our activities planned for 2024 and the cost. It's fully transparent, and you'll see work there at THT of that nature, basically advancing the de-risking and setting us up where we can complete a PFS if that's what we want to do.
Okay, Denison is a pioneer when it comes to ISR in the Athabasca. Dave, are you finding any evidence of more ISR amenable projects out there in your portfolio, of course? Is there any potential?
We are looking hard, that's for sure. We think we could uniquely add value to those. We do
Maybe
have
Midwest.
Yeah, look, I would flag two. So Midwest is a project that we own together with Orano. It's close to the McClean mill. Over the last 2 years, we have been doing internal evaluations for ISR mining at Midwest. We're also evaluating SABRE mining at Midwest, and that work is expected to continue in 2024, with the potential on that side for us to be able to take an internal concept study that we previously announced, potentially move that forward to a PEA, which would be the first modern update of economics on Midwest. And I will say the Midwest has the potential to be an excellent project, where the market may be surprised even what our 25.17% of that is worth. So we are certainly working with our partner Orano to bring our ISR expertise to that project, and Orano, of course, to bring their leadership in SABRE to the project as well. So that is an exciting project to follow. The second one is an exploration property located quite close to Wheeler River, just adjacent to the southwest end of Wheeler River, called Moon Lake South. And so we announced a discovery of a high-grade uranium intercept at Moon Lake South in 2023. This is 2% range over 8 meters. And importantly for us, it was what we call perched in the sandstone. So it's in sandstone above that basement contact that we describe as the unconformity. So anything in sandstone, whether it's perched or right on top of the basement like Phoenix, that's attractive for us when it comes to ISR mining. And so we do have a program in 2024 at Moon South looking to understand where that high grade's coming from. It is a very complex geologic setting there. And so I think we don't expect to necessarily figure it out overnight. But these kind of high grade perched mineralized results, they have often been traced back to a more meaningful deposit that is occurring nearby when you look at some of the analogs in our industry. So we are working Moon South, and we also have targets that we continue to test at Wheeler River, because really anything that's in a reasonable radius of Phoenix has the potential to become a satellite operation to feed the Phoenix plant, and that could be very positive from an economic standpoint. And then maybe last property that we've got to focus on this year is a property called Johnston Lake, which is actually sort of on the northern side of things, closer to Waterbury Lake and McClean. This is a project that we've been working on sort of on a long-term basis because it does have great potential, previously mineralized holes underexplored, but in an area that's a bit tough to get to. So it's been a bit of a multi-year program. And last year we started our drilling there for the first time. and we'll be back there drilling this year. Our company is unique in that while we have a great flagship asset and we have a portfolio, and our portfolio really does have the potential to deliver really meaningful incremental value to our shareholders that many of our competitors just don't have access to that because of the nature of their companies and the projects that they're working. I mean, McClean Lake is a really good example. We're going to have production in 2025, and that's coming out of our portfolio. Midwest, this is a project that's already got an approved environmental assessment as an open pit mine. This is the sort of thing that we might be able to leverage to also see production sooner than others if it was a fresh discovery. And we already have these assets. We haven't had to go acquire them. We haven't had to go issue a bunch of new stock to add these things in recent years. We already have these assets. And now it's our team, which is quite capable and has grown and has leadership in ISR and excellent exploration pedigree. We've already got the team. We've already got the assets. We just need to work them.
Yeah, definitely. And we touched on some other projects besides your flagship project. You have like almost 40 projects in the portfolio. Is there any plans, other exploration plans for those properties? Are they all in a good standing?
Yeah, all the properties are in good standing. We go through a prioritization, or all of the material properties, and sometimes we do have claims lapse, but they're things that we've identified as not having really enough potential to warrant work. But we really do want to make sure that we have a long-term company here, and so we do try to prioritize these assets every year. But we try to maintain good exploration projects in our company. There is the potential for taking some of the projects that we can't get to when we look at our prioritization. If we can't get to it in the next 5 years, maybe even 7 years, there's a potential avenue to either vend them to other parties or spin them out. We would want to maintain exposure if these were good projects. If they're projects that we don't see value in, we would let them lapse or sell them for just to sell them. But if we're maintaining exposure to them in any of these strategies, it's because we think they're good. It's just that we're not going to get to them. And I can say that we have projects that we have not touched in a few years that would be the best project that many of these exploration startups or juniors in the Athabasca, it would be better than anything that they have. We have the advantage of having a lot of this prime ground for many years from past cycles. So I do think that there's just because we might not work a project does not mean it's not of high value. It just means that we have higher priorities above it.
Okay, you had 2 investments in the last couple of months, and I would like to hear about that. First investment was in F3 Uranium. What is your intention with this investment, and could we see more investment in F3 going forward? I mean, they will spin out. They announced spinning out F3, F4. What is the plan here, Dave?
Well, look, discovery in the Athabasca Basin is incredibly difficult. So we follow everybody's activity in the region, and F3 certainly had some very positive results on their JR zone, and we follow that closely. We had an opportunity to make an investment in F3 via convertible debenture. So we saw this as something that was actually pretty attractive to both parties. Increase the balance sheet strength of F3 at a time where they have good things to spend the money on with JR zone, and at the same time for us, gives us a really good return, a nice coupon on it with very low risk, because we see that there's certainly more than $15 million of value in JR zone already. But with the ability to convert. And so, we have this essentially call option on a good chunk of F3 stock that could be useful in all sorts of different scenarios. That would effectively give us, somewhere in the range of a 5% foothold in the company if we converted, and it would be a conversion likely in the money. So realistically, we just saw this as something that would be good for Denison's strategic positioning in the region, as well as for our investors, to make use of our strong balance sheet to have that exposure to F3. And so we'll continue to follow F3. I mean, F3 is a pretty well capitalized company right now,
Yeah.
and they've got some areas that they're drilling that we'll all follow closely. You know, and it's not more complicated than that.
You also closed an earning agreement with Grounded Lithium. How that fits in your business model, and could we see more investments like this in different non-uranium commodities?
Mm. Well, look, we've had a lot of questions about this. I mean, it's important to understand the scale of the investment. You know, it's a multi-stage earn-in, so allows us to carry out work and assess the Kindersley Lithium project. And Kindersley is located about 2.5 hours away from Saskatoon in our backyard here in Saskatchewan. But, you know, under that earn-in, we have multiple options of different rates that we can earn into the project based on project spending. And that allows us to carry out the de-risking from our de-risking platform that we've built here from Phoenix. We have all the capabilities to successfully de-risk complicated projects or projects that maybe are a little bit different than the norm. But even if we go through the entire earn-in and invest a 75% interest in the KLP project, the sort of net cost to us of that is around $6 million, between $6 and $7 million. So at the rate of our current market cap, we're talking about less than 0.3% that's going to this project. And so, yeah, I understand people being interested in the fact that lithium is not uranium, but I do really want to remind everyone that it's a very small investment in the grand scheme of our company. It's not diverting any of our attention away from Phoenix. We have a capable technical team here that's finished their de-risking of Phoenix. They're moving on to Midwest and THT, and they have the bandwidth to support an assessment of KLP. Now, on KLP, you know, here's a project that's in our backyard. It's a lithium brine DLE project. Well, there's a lot of similarities, Lucien, to like a lithium brine DLE and ISR mining.
Yeah.
Now, while you don't have to leach in the ground because the brine's already lithium rich, you are using drilling and wells to extract a solution that has the mineral that you want in it. That sounds exactly like ISR mining.
Yeah.
And then on surface, you have to process it to get to a saleable mineral product. So you know, there's quite a lot of synergies in terms of that project and the geography and the province that we're in and the environment we're operating in. And look, we think that there's potentially enormous value in this project. And by using our balance sheet, we're able to fund investing in lithium when lithium is underappreciated, perhaps under going through sort of a cyclical low. Attractive time to invest in it, de-risk, and then potentially have our shareholders realize significant benefits from being able to articulate the viability of a project that could have, you know, quite a large economic benefit come from it. Now, what we do with it in our company, well, that's something that we have a lot of options on. It doesn't mean that Denison is targeting to become a lithium producer. It just means that we see shareholder value that we can create from de-risking and advancing this project under our platform that we've built in Saskatchewan. Look, I think it's my job to look for things that can add value, you know, and not just, you know, deliver on Phoenix. Yes, we absolutely have that as a core part of our business. But to think that we wouldn't look at other opportunities, I mean, there's a lot of value we can create from the platform we have, and that's our job.
Okay. Final question, Dave. Goviex and Skyharbour. You left the board. You are not on board for Goviex anymore. What's the plan with that investment, that shares for the company? Will you hold it? Will you sell it? Same question for Skyharbour.
Yeah, so I did recently come off the board of Goviex. I mean, activity at Denison is obviously ramping up significantly, and it has been for years. I've been actually quite challenging to juggle the 3 different board positions between Denison, Goviex and Skyharbour. And so, you know, we're working with the management team at Goviex. We sort of organized an orderly transition for me off of the board. And really it was precipitated by Denison's position having declined in relative terms over the years. So with their financing, some of the financings, not so much the most recent one, but a previous financing, we dipped just below the 5% level. And it was at 5% that the company had a right basically to appoint a board nominee. So this really coming off the board is stemming from that progression. We maintain Denison still has it's a large position in Goviex. And I would say from a Denison standpoint, I'm reluctant to do anything with that position, certainly before anything is worked out in Niger from a geopolitics standpoint. You know, Goviex is an excellent company in that it has diversified assets. So, you know, it has a great development project in Zambia called Matanga. That allows them to be focused there while things are maybe subject to more uncertainty in Niger. But at the same time, the message that I understand is that from a stability standpoint, yes, broadly geopolitically, there's instability associated with the coup. But in terms of confidence around the mining licenses and the situation around Madawiela, is that the reporting from the field is that that's very solid, and we've not had any indication. The Goviex team hasn't expressed to me any indication of uncertainty around the project there. So I think it's a company that everyone should really be following, and we're going to follow to see if there is potential for a value re-rate coming out of stability. And maybe more geopolitical optics from Niger before anyone should really do anything there. And so that on our end, we certainly don't need the cash tomorrow or anything like that. And so we have the luxury to be able to make sure we see, you know, Goviex move through the situation in Niger first. On the Skyharbour side, we recently increased, or in 2023, we increased our position in Skyharbour by selling the South Dufferin project to the company. And look, we like Skyharbour. They've got good assets in that company. Particularly, we like Russell Lake. It's a project that's adjacent to, they have an earn-in with Rio Tinto, where they're earning into Rio Tinto's Russell Lake project, and this project's adjacent to Wheeler River. We follow everything in the region, but we definitely follow things that are happening on neighboring properties. So we do like Skyharbour, and their management team is I think one of the best in terms of properly promoting their business. And I'm still on the board there, and we continue to have a good investment there. I don't see us doing anything with that. We like exposure to their assets.
Okay, that was David Cates, CEO of Denison Mines. David, thank you very much for coming, and let's catch up with new news on the horizon when you have some. Thank you very much.
Yeah, thanks, Lucian. Appreciate the time and appreciate the attention from you and all of your followers. Thanks very much.